Friends, we have a red alert out there. Some stuff is happening in the banking sector that you need to be aware of. I'm giving you this warning. We have potentially a Lehman Brothers type incident that has just happened. We're talking a major bank with $10 billion in assets has just applied for bankruptcy. We have federal prosecutors investigating for fraud. And we have major other banks that have major stakes in this bank. We're talking hundreds of millions of dollars lost for JP Morgan Chase. We got Fifth Third Bank. We got Barclays. If you're familiar with Carvana, also having a major problem out there. We have billions of dollars lost, and this could trigger a stock market crash, friends. I'm going to walk you through some of the stuff that's happening. Let's get into it. Welcome to the Poplar Report. I'm Steve Poplar. I'm an accountant by trade, and these are the things the mainstream media just isn't covering, and they really should be to keep you guys ahead of the curve. All right, so what's happening right now is not exactly clear because these banks are trying to cover this up, trying to keep this from us being aware of what's going on. But what is clear is that major banks have been propping up high-risk loans. We've been warning about this. Used cars for people with low or no credit. And when I say people with low or no credit, I'm talking about people who are not allowed to be in the United States are getting car loans. People who we're not exactly sure who they are because they don't actually have identification. The identification that they're using is basically they walked across the border, said, I am so-and-so, and somebody wrote that down on a piece of paper, and that's the only documentation that we have of who they actually are. But in some states, they take that piece of paper and they walk over and get a state-issued identification, and then they're walking that over to places like Tricolor Holdings, and they are getting major tens of thousands of dollars of loans to buy used cars. They're not just doing that. We've also heard from some of our friends in the Watchman community that they're also using that to basically get mortgage loans on homes. I know you can't get a mortgage, but these people can apparently. And they're also getting major loans, unsecured loans on cars. Federal prosecutors are now digging into the used car seller and subprime auto lender Tricolor Holdings. Now, I believe I actually got a loan from them back in the day. They sound a little familiar, so I'm thinking I might have. This is a major issue because not only them, but other car companies, used car sellers like Carvana, also having problems. They just issued a statement that they have been issued a SEC subpoena. Carvana is not a small drop in the bucket, right? Carvana is kind of a big deal. And they've just been issued an SEC subpoena because, and we don't know why just yet, but at the same time, we have federal prosecutors digging into Tricolor Holdings, who has just filed for bankruptcy. Now, like I said, this doesn't just impact them and the people that they're borrowing money from. JP Morgan Chase apparently has $200 million worth of exposure to Tricolor Holdings. Fifth Third Bank has about $200 million worth of exposure. Barclays also has about $200 million. Each of them kind of went in, took little cuts of this, and that's why it kind of sounds fairly standardized across them. But Tricolor has filed for Chapter 7 bankruptcy yesterday after fraud was discovered at the subprime car lender. So people that shouldn't be getting loans for cars, Tricolor has been issuing them loans using money that it borrowed from JP Morgan Chase, Fifth Third Bank, and Barclays. Are you seeing a problem here? And if you're like, that sounds a little bit like the 2008 Lehman Brothers crisis. It does. It does sound an awful lot like that. Lehman Brothers was investing and gambling on subprime mortgages to people that shouldn't have been getting mortgage loans. And now we have Tricolor Holdings doing the exact same thing and following the exact same trajectory with subprime auto loans. Now, subprime auto loans are a much larger, much smaller business because obviously cars cost less than houses, but it's already projected that they could have lost $2 billion, that they have $2 billion worth of loans on their books that are worth absolutely zero. We've seen loan delinquencies, payment delinquencies increasing over the past several years, and I've been warning about it on this channel for year after year. But just because the freight train hasn't hit you yet doesn't mean that the freight train coming right at you isn't going to hit you. Sometimes it takes a little bit longer than what you thought, but the collapse is still coming. All right, so Dallas-based Tricolor Holdings just served, it was serving undocumented people as well as subprime people in the U.S. Southwest. It did file Chapter 7 bankruptcy with $1 to $10 billion in assets and liabilities. Now, that's just an interesting type of statement right there. $10 billion is different than $1 billion in the fact that they can't quite say exactly how much. But experts in the field are saying it's closer to the $10 billion. And the fact that they are losing $2 billion that we know of so far, how much of the rest of those assets of $10 billion or so is going to be shown to be losses. So now we have borrower delinquencies. People just aren't paying back those loans. We're seeing hundreds of millions of dollars of losses for JP Morgan Chase, Fifth Third Bank, and it exposes, because this is just one duck in the big pond, $1.5 trillion worth of auto asset-backed securities. What they did with the mortgage-backed securities, taking delinquent loans, bundling them together with not-so-delinquent loans, and then selling them as an asset and claiming that the delinquencies are below certain percentages, selling them while lying at the same time about the quality of those loans. This is a big, big problem because what you can do is you can find people who are delinquent in their loans. You can offer to restructure the loan. They're not paying. So what you say is, well, how about we bring you up to date, no cost out of pocket. You don't have to pay any money today, but we're going to restart the loan. Starting next month, you're going to start paying X. And by restructuring it like that, suddenly it's not delinquent anymore, but now they're up to date, right? And you brought them up to date by just playing a little shell game. Now that delinquent loan has become a non-delinquent loan. You bundle it together and sell it like a hot potato to somebody else quickly. And that's the kind of stuff we're dealing with right now, is that these companies, these banks, are buying up massive amounts of loans that are massively delinquent, and they're playing financial games in order to pretend like they're not delinquent. But so many people are upside down on these loans. You have people with $50,000, $60,000 out, and it's being secured by a vehicle that's worth $15,000 to $20,000. Anyone in their right mind would walk away from that loan if they're being forced to pay it back. And so this is the situation we have all across America, $1.5 trillion, and we're seeing delinquency rates of 15+%. Now, the whole mortgage-backed security crisis of 2008 exploded once it hit 8 or 9% delinquency. Now we're looking at over 15% delinquencies in subprime autos, and still nobody's panicking. But that could change very rapidly as we see these banks chalking up hundreds of millions of dollars of losses. We have Tricolor Holdings actually imploding. The question here now is, as these dominoes start to fall, who's the next domino that's going to fall? And is it going to be one of these bigger banks? Is it going to be PNC Bank? Is it going to be JP Morgan Chase? Is it going to be Fifth Third? Is it going to be Barclays? We know, we've been told by the Federal Reserve that these banks are already sitting on tens of billions of dollars worth of damages. Some are suggesting that they have actually taken somewhere to the tune of $2 trillion worth of losses unrealized. What that means is that their investments, when you play in the casino, is that really considered an investment? They've booked about $2 trillion worth of losses. The investments have gone down that much, and yet they haven't reported those losses to the shareholders. They're saying that these assets are worth this much money when they're really worth this much money, but they're borrowing against them as if they're worth that much. So they're loaning money to each other, pretending these assets are worth more than they really are, pretending like they're getting a constant revenue stream from these loans, when in fact they have default rates that are much, much higher than acknowledged. Friends, it is literally the 2008 crisis all over again, except it's way worse. It's way worse because it's not all concentrated in one area. They have losses here, they have losses there, they have losses everywhere, and they're really hoping that if they can just push the stock market high enough, fast enough, that is going to bail them out. The Federal Reserve is hoping to bail out all the banks by pushing the stock market so high, so fast, that it somehow will offset their massive losses in treasury holdings, their massive losses in their loans. Banks are not in the process of loaning people money anymore. If you try to go get a home equity line of credit, you'll find how many of these mainline banks don't even do that anymore. Most people who get a car loan are not getting it through the JP Morgan Chases. They're not getting it through the Fifth Third banks. They're not getting through PNC or Bank of America. They're not getting it through these big banks anymore. They're getting it through these smaller lenders who are lending them money, bundling the loan with a whole bunch of others, and then selling it to the banks. The banks are basically just becoming trading houses where they are trading these loans back and forth, and they're gambling in the casino. And we're seeing that these investments of them are blowing up in their faces. I'm trying to get this out to you guys before market close here on Friday to try to be a warning for you because we may see another one of these banks go down before Monday. A lot of this kind of stuff happens over the weekend, so hopefully you guys can get yourselves to safety because I think we may be seeing an implosion starting on Monday. That is, I can't say that for sure. I don't have insider information on that, but we've seen this before where we've had a relatively small loan lender go down midweek because they can't help it. And then the bigger bank actually waits until the weekend to default. But the fact that we're seeing banks filing for bankruptcy right now should have everybody's ears perking up. And the idea that this is happening while the stock market is at all-time highs should also be very confusing, confounding, and concerning to anyone who actually has half a brain. Now, I'm not talking to the bankers who they don't really have half a brain. We're not talking to the politicians who don't have any morality. I'm talking to you guys who have your investments in mutual funds, in the stock market. You believe in America, and kudos to you for doing that. But the stocks are so highly overvalued right now. This is a dangerous place to be in right now. The stock market can really only go one direction, and that is down. So that's my warning to you guys. I laid out my reasons on why I think that is and what is actually happening and transpiring the last couple days and what may happen going forward. Let me know what you guys think down in the comments down below. Thanks so much for watching. If you want to check out another video from this channel, there's one right up here. If you want to, guys, talk to Genesis Gold Group about what you can do with your retirement account because getting into precious metals might be a really good move right now. pivot out of highly overvalued stocks and move into something safer like precious metals. I'll put the link right up there on the screen. Fill out your information and they will get in contact with you to answer your questions. All right, friends, thanks so much for watching. Steve Poplar of the Poplar Report, out.